Yeah, I'm losing my edge.
Today, Pete, I wanted to talk about whether or not the US dollar is dead. And I'm obviously being hyperbolic. But this is weirdly, when did this start? Because my dad, and I know you definitely have used these terms before, and I think I've heard a few other more experienced traders. Everybody wants to say like, oh, that currency's going to dust, or like, oh, that currency's dead. I don't know where that started, but it's definitely a colloquialism that gets passed around the trading community very often. Though I don't think the dollar isn't dying. Sorry that I got you to watch this show with that sensationalist title.
No, but it's funny because I got an email about a trade I had done and a little bit of question about that. And this viewer and trader was very interesting. It's like, I can't believe this dollar is held in as well as it can, considering the amount of money they're printing, that being the federal government. And with the idea that this dollar is going to be worthless at some point because there's going to be so many of them floating out there in circulation.
Sure.
I think that's where you talk about, a currency is dead. It's got, and you make a good point. It's dead in terms of its trajectory. It's doomed to a lower value. There's been things when the pound went through a very painful economic cycle. Oh, that currency is dead. And it really meant just that it was going to be in this lower, slower decline and have no likelihood of a bounce back. So is it overly dramatic a little bit? Yeah, but I think we've talked about this overriding dollar strength for almost 2.5 or 3 years now. So the give back, we've seen the amount of rise in the dollar and the fall in it. So I think that's where we start to talk a little bit about this.
Yeah, and I'm glad that you brought up that second idea, because the first idea, and I'm glad for just my personal self in a selfish way, that does make sense. That the like, oh, this currency is dead means that whatever country or central bank has printed so much of it that it's so undervalued that it's literally not worth anything. But in this scenario, we're more talking about this concept of it's on a decline, and a lot of people are just saying this US dollar, it's declining, it's not bouncing back hard or anything like that. So is it dead? And I actually want to make the case that it's not dead. There's actually been a decent amount of activity in this US dollar as recent as the last 24 hours, but we'll get into that in a second. It has been a tough go since these highs of March, right up here. And that was the high in the small exchange index, is the high in the US dollar, just as a concept for the last several years. And it's been a pretty much straight shot since those highs, or the Ides of March. I don't know if this was exactly the 15th of March. Pete, do you know what the Ides of March is?
Yeah. Just move on. I love when you take these little snippets to show off.
I spent 8 years of my life learning Latin.
Show off some part of your education.
And
then you've got to pause to get affirmation about it.
Who was famous?
Just spinning the term out and letting it stand on its own. You've got to pause the whole discussion and then say, look how smart I am. Recognize me. Recognize.
I'm the comedian. Yeah, I'm the comedian who's like, did you get it? Did you get the joke?
You are. You're the needy comedian.
Who was famously killed on the Ides of March, Pete?
Caesar, wasn't he? Julius Caesar.
Yeah, Caesar. The 15th of March. The Ides on
I only remember from the Antony and Cleopatra movie, or whatever it was.
I didn't catch that one.
It was a classic.
The Ides of March for most of the Ides of most of the other months in the calendar are actually the 13th of that calendar month, but the Ides of March is actually
how does the Greek guy roll into the Latin guy? I don't get that. Into
Greeks, I mean, they were before the Roman Empire, but I don't know too much about Greek. I had the option to learn Greek, but I just stayed with Latin because they have a different alphabet, and I don't know. It's too
God,
much.
You've got such a troubling childhood. This
show is really hard for me.
Unraveling the world of Frank. It starts to explain a lot.
It was really hard for me, but it hasn't been hard to trade this fall from grace in /SFX, because you can see here a nice little graphic that I don't think we flex enough here.
Agreed.
Is just the high to low ranges for this dollar. Now, obviously, in March, I mean, you look at this move, the high to low ranges intraday for /SFX were very large, but you're seeing a consistent amount of activity here. The high to low range on most of these days is around 50 cents to a dollar, which is $50 to $100. And when you look at the long-term chart here, Pete, in the last month and a half, almost 2 months, this market has only fallen $4 or $400. But when you think about the fact that that's about 30 to 40 trading days in those last 2 months, and each of them have seen a high to low move around a dollar here, that's telling you that there's a lot more activity for what has been a decline, sure, but only a $4 decline over about 40 trading days. That's seen about $1 of activity every day. So it's been an active fall from grace here for /SFX.
Absolutely. I love the fact that we're taking a step back and looking. Well, you can argue we're taking a deeper dive or taking a step back. We're just looking at the market in a different way. We talk about defining opportunity and finding what we want, which is that back and forth, the less one directional trade. And how do we find that? I think this exercise of the back and forth is sometimes harder to find in things that we might look at more frequently in terms of some of the markets we've been trading. So this amount of movement, this 50 cents, 60 cents, $1 is important because that's $50, $60, $100. And honestly, I think we still catch ourselves on things like silver and 2 years. I still don't remember the 2-year tick is some freakish amount.
The two-year tick? It's I think 756.5, isn't it?
Yeah, but I thought they cut it in half again. It's like
they've been cutting it in half and doubling it. If you've noticed that, it's twice the 2-year. If anybody doesn't know, is double the notional of other treasuries, but it's got the smallest tick increment. So it's like the same tick increment as the 5-year, but it's twice the
size.
It's confusing, but this is all to say.
Whenever you need two guys and 30 years of trading experience to spend 2 minutes explaining just the tick size, you've picked the wrong thing. So I love the fact here is we go from product to product here. We talk about product and difference. Part of the tools to do that are uniform product construction. So you look at this and you can say, hey, that's a $60 range. I know that. I don't have to learn anything. I can just put it to work for me. That is great. So I love these. You know what? We've started when you say we. Now, guys, I know Frank runs the slides, but I just want you to understand that when they're truly crafted is, in somebody else's workshop, so to speak. But I just show up. I digress.
I show up at, who do I sound like? I show up at 12:03 for a show that starts at 12. And I say, I've been here forever. What are you guys doing? That sound like Frank or somebody else that's on this show. But there's a lot of short-term activity here for a market that's in the long term or medium term just declined here. And I'm glad that you brought up the small exchange. We're already covering 3 asset classes. Without giving too much away, I think by the end of the year, we're going to cover another 3 asset classes with the products. And what's great about all of these different asset classes, the diversification, different trades. Right now, you're seeing the stock market stagnant as currencies and metals are moving. And everybody, a lot of people trading that small precious metals and trading this small dollar. What's great, Pete, is that they have the same tick increment. But we've also, I don't know whose idea this was. Maybe it was mine. It's a good idea. So it might have been mine. But all of these different asset classes have the same tick increments, Pete. They all have this notional size that is different, but lends to moving about $100 a day. We looked at this same visual with small precious metals, the metals product from the small exchange, and it was very similar in that the daily range was, I think, $1.20, which is $120, and the high to low range was like $1.60, which is $160. You go over to FX here, and you've got a daily range of 70 cents or $70, and a high to low range of a full dollar or $100. It's really something nice to say, okay, I've got my strategy, and what are the tick increments? Okay, the tick increments are all the same, and I want to apply this strategy to different asset classes, and knowing that I'm still looking for about $1 in movement. That's when I want to start employing strategy across all small exchange products is really freaking cool. And diving deeper into the small dollar in particular, we've seen a lot of these days, Pete, where the small dollar settles up or down 50 cents or 60 cents or 70 cents but you're seeing these intraday moves that are about 20, 30, 40 cents beyond that. And that's what I mean by activity amid the decline here. Yeah, if you bought small US dollar a month ago, it's lower. But if you're looking for these moves, and I think it was the day before yesterday, small dollar was down almost a full buck, and then it bounced back a little bit. And then the next day, it actually bounced back another 50 or 60 cents. And now today, it's on its heels again. That's a lot of activity that's in most people's wheelhouse, right, which is around $100 worth of movement every day.
Yeah, absolutely. This is, and we talk about that, very comfortable level of movement. It fits very well into a lot of people's wheelhouse in terms of adding product, adding exposure, substituting efficiently. We always talk about that. But the back and forth of the tradable opportunity, to look at that visual of that low to high during the March pandemic speaks to there's no guarantee, as you said, that the moves are going to be $100. There is,
sure.
We know, like every other product, you can't bind a product to move by a certain amount and then stop no matter what's going on. But in terms of statistically significant, this is where these products live in a very comfortable world of movement, which is great. And I think that I like the fact that we can go back and look at 70 and 100 or 70 and $1. I know it's $70 to $100. Doesn't matter what I'm looking at. And that's great. So the idea around this range and around the opportunity. So I think the skew in the metals was interesting, but it's kind of a function of what it's doing. But what are we breaking down here, Franklin?
So 2/3 of SFX's days since July 1st, Pete, have been lower. But with all these bounces, I think it's still a very viable strategy from the long side to say to yourself, okay, yesterday the market closed at 150. I'm looking for anything that is around 149.30 or 149 even, to look for just a $30, $50 scalp in there. It's really a viable strategy to me amid you never see a market, Pete, that over a long period of time moves in one direction 2/3 of the time. Even something that like Tesla or other markets that are up over 100% in the last couple of weeks or months, they still have a pretty even back and forth. But what's nice about this is this isn't a market that's necessarily dead, even though it's declined 2/3 of its days. And that being said, Pete, you have been one of the largest, honestly, I'm so impressed with how you've been able to trade both sides of this. You've been one of the largest proponents of trading both sides of this. It goes for the short side as well, right? Like,
absolutely.
You shouldn't cut yourself off in the same way that in small precious metals, we're looking at, everybody wants to be short because it's moving higher, but there's been just as much opportunity to buy those dips in that market. Same here, where if you're willing to, there was a bunch of action here, a bunch of action here, willing to look at these bounces as, okay, the market got as low as 149. And then if it bounces back to 150 and a half or 151, that's a good selling opportunity. So both sides of this trade are definitely there. And I don't think this US dollar is dead, Pete.
Not at all. And you know what? We started, I had kind of been a dollar bear. We had talked about that. I still am. But I actually bought SFX at, I look back to the beginning of the month, and the first time I tried to, lean on this extreme a little bit, I bought 151 32s and 34s and actually sold them in the 150 90s. So there was a scalp where none of us know anything, to borrow a phrase from our good friend Jim Schultz.
Sure.
Wanted to trade both sides and was mindful of, we always talk about this, of having a reasonable level. Now, we ended up picking up some of these yesterday at 149, 20, 21, and 22, and we're able to turn them for a point today. So, you would argue, well, why would you sell the 150 30s? Look what this can do in terms of correction. That's not the trade. The back and forth is mindful, and there was a case where I don't always risk, 50 cents to make $1. It just happened to work out in this particular case that was the issue here. But I think there's good back and forth. And The one thing you point out, Frank, which I love, is if you look at this, sometimes you tend to take one side of the trade off the table. I can't sell them. Look how low they are. Well, if you had said that in May, June, July, and August and been stubborn with that, you wouldn't have been participating, or you would have been participating on only one side. That may have been a struggle. So keep both sides open. And I think this back and forth metric is really important to determining that. Is this cheap? Absolutely. We've had a nice corrective bounce. There is back and forth to be done here every single day for the most part. And when you hit on a statistic of 66% of the time, can I count on the back and forth? No, we know nothing's perfect in the world. Nothing's 100%. But we talk about odds. When we get odds sitting around well past our 50-50 performance for a static delta trade, that becomes very interesting to us.
Sure. And to your point of, and in conclusion here, your point of it doesn't always move in your favor, and maybe you buy it and it actually continues lower, or maybe you do get caught up. You're looking for that dollar range and you get what happened here in March. That's why I put these little red guys here above the shorts and below the longs, because what happens here is, okay, you get the sell off, and instead of getting caught in 156 all the way down to 151, you tried to buy it here, it moved 50 cents or a dollar lower, and you get out, and then you try again, and eventually you get in the long term to those odds that are greater than 50-50. And so that's how you're able to, Pete, get aggressive, like you're saying, looking at that dollar range in this product without getting cleaned out when it starts to move $2 or $3 per day, because you have to have these. No one wants to have these two red bars in here, because those are the losing bars. But if you don't, Pete, then you pick up a dollar here, you pick up a dollar here, you pick up a dollar here, and then you give back two or three,
right?
And it's not worth it then.
No, and you know what? Frank and I are not, and we never have said that here are the mechanics around that. You risk two to make one, or whatever you've seen so many guys selling. You know what? Your mechanics are your own, and they have to fit within your world, your risk tolerance, and what you're trying to accomplish. And you need to, I think the key takeaway for us is if you're going to trade static deltas in direction, have an idea of management of both sides of the trade, so you can let the probabilities work for you. And your example there was perfect. Make a dollar, lose $3. Well, that in and of itself is unsustainable in terms of profitability, because if you lost $3, what are the chances of you getting on your first trade, instead of giving it back to zero, you're having to make appreciably more to get back to zero? So that's what the takeaway here is. There's lots of two-way, and a visual here that looks like it's gone straight down is not the case. There's lots of two-way tradable opportunity, as long as you're mindful of mechanics.